everyone, my name is Jananee. Before I introduce my topic, have you ever heard of the different types of crisis, such as the financial crisis, the Asian crisis, 1980s, the US financial crisis, and the South crisis in 2012? Then you can guess what my topic is about. The topic I chose relates to week number 15, the business and major largest crisis, known as the financial crisis. What is the financial crisis? The financial crisis had been a major impact on the economy when businesses and consumers are unable to pay their debts, and is often related to a panic situation like the Great Depression and the economic crisis of 2007 to 2008. My central question is, why did the financial crisis start, and has it come to its conclusion yet? To answer this question, I'll talk about the financial crisis happened, household debt, and the financial crisis, financial effects of natural disasters, and the pandemic. Firstly, let's talk about how the financial crisis happened. The financial crisis happened in September 2007 when the British Broadcasting Corporation, or BBC, found that an economist stated that customers lined up outside its branches. Then in September 2008, a US bank, Lehman Brothers, filed for bankruptcy because they were unable to pay debts and global financial system was a catastrophe. The US government refused to bail them out because they created a problem that resulted in other banks taking too much risk financially. Not only that, I learned that the global financial crisis had spread to Belgium, France, Germany, Italy, Netherlands, Sweden, and Switzerland as well. As long as the crisis, it had occurred because there was a very large increase in mortgage debt. For example, in the United States, mortgage debt per household went from $91,500 in 2001 to $149,500 in 2007. However, the ultimate cause of the global financial crisis was political. Finally, many people borrowed too much money from banks, believing that near zero interest rates were normal. The first course material I'll apply is according to a documentary, Money in the World Economy. I learned that financial crisis was caused by European Central Bank, or ECB, since they had been lowering interest rates ever since the financial crisis in 2008. This answers my question relating to why the financial crisis happened, because one of the reasons was European Central Bank increased trillions of euros, so even though interest rates decreased, people bought shares. Not only that, it led to real estate to increase prices, and the rise in prices in places where people borrowed money took on more debt, while rich people and companies did the same to be favored. Also, it mentioned that states, businesses, and individuals all have debts, and a world living in credit was part of the beginning of the financial crisis in 2008. Another important point relates to why the financial crisis has happened is because of the increase in debt, where in the documentary it stated that the Ponzi system is a system where the economic organizations are borrowing large amounts of money from each other and using that to make money by lending it to others. What this means is people and organizations borrow money to lend to others, then those people borrowing from organizations lend it to more people, and more people are borrowing, and so on. This is exactly what we saw in the documentary, and that is what is happening during the financial crisis. Borrowing is the reason why the crisis has happened. Now I'm going to apply the second course material, How did the financial crisis happen, based on the reading called First 5,000 Years, Chapter 1. Graeber stated that the U.S. foreign debt takes the form of treasury bonds held in by institutional investors in countries such as Germany, Japan, South Korea, Taiwan, Thailand, and Gulf states. So also he mentioned that debt is an obligation to pay a certain sum of money back. This relates to why the financial crisis happened, because in the United States, debt was increasing and people from many of those countries could not afford to pay back the debt during the crisis. Also in lecture week number 15 relates to why the financial crisis happened, since we learned that lenders, including industrialized countries, big banks, small banks, and other international institutions, such as the IMF, the International Monetary Fund, or the World Bank, and the governments, also had roles in the financial crisis. So it helps us to understand another reason why the financial crisis happened, which was not only because of debt and interest rates, but also because the IMF and the World Bank and the government forced developing countries to pay their debts. Developing countries could not afford to pay back their debts because they only would get loans unless they were accepted with restricted conditions. Secondly, how is household debt related to the financial crisis? Based on my research, I learned that it started in 1929, where stock markets and credit are falling. Then in the 1930s, national market offered a way to understand development of mortgage markets. Markets include either primary, retail, secondary, or even wholesale markets. In history, this overlaps with the accounts of key moments in the development of the U.S. housing financial system. Markets include a National Housing Act of 1934 was established to set institutional laws. After that, in the 1940s, agencies liberalized the terms of the mortgage insurance program, extending loan maturities and changing appraisal requirements as a set of macroeconomic policy goals. Next, what happened in the 1990s was where the borrowers were assigned and credit scoring was made by the candidates. Later, in 1994, Congress of the United States passed the Home Ownership and Equity Protection Act, or HOEPA, which created disclosures to consumers to take on mortgages from their homes and restricted them unless they paid the mortgages. Then, 2007, people are finding out how to get private capital to return to the U.S. financial system since 1930s and desocialize the market. In 1930s, there was extensive changes that happened in 2010 to the U.S. financial system since that year of 1930s. The attempt to stabilize mortgages and focused on this protection of investors for market securities and consumer protection against large loans. Also, disengaged mortgage requalification, which started in 2010 when the act was signed into law by implementing Dodd-Frank Act's reforms to mortgage market since 2014. Thirdly, I'll talk about there are many impacts or risks that debt has caused in financial crisis regarding debt for households to be paid, and so the burden of debt continues until debt is paid off. But it occurs when there are job losses because of the economy and people are not able to pay off their debts since they do not have any income. As well as paying off debt and not being able to afford it, debt in Canada has been increasing rapidly. During the financial crisis in 2008, debt was 80% the size of the economy, while in 2010 it rose to 95%, and by 2021, debt was exceeded even more. Also, household debt in the US fell from 100% of GDP. It increased by 75% in 2008, and in 2021, there was a huge increase in debt. What did the United States and Canada do to resolve the problem? I learned that the US households reduced debt, but Canadians increased theirs, and this may continue to increase unless housing affordability is considered. This could also damage, especially when negative external economic event happens like global economic crisis in returns that leads to job losses and it becomes impossible for mortgage holders to pay their debt. Another impact was interest rates decreased, and in the last decade, low interest rates have slowed down economic growth. Lastly, interest rates might remain high, but high interest rates with Canada's household debt burden will continue to lower economic growth. Fourthly, what are the financial effects of natural disasters? This is what I'll be talking about next in relation to the financial crisis. Larger natural disasters have cost tens of billions of dollars in damage. The most severe natural disasters that affect us financially are hurricanes, earthquakes, droughts, and floods. So they not only change lives of residents, but they create a huge expense for governments, businesses, and individuals. One larger disaster, Hurricane Katrina, has left billions of dollars in damage. These are major events in 2020 and 2021 as natural disasters impacted the United States economy. Weather data indicates that natural disasters are increasing due to increased construction on buildings and climate change. As well as these causes, other effects where businesses suffer from direct expenses to renovate damaged property and equipment. After the National Centers for Environmental Information, NCEI, in 2020 was the sixth consecutive year 10 or more climate events cost over $1 billion impacting the United States. The direct costs include damage to buildings and homes and repairing of roads and disrupting damage to business properties. However, from an economic point of view, the effect of natural disasters is greatly regional. And business recover quickly as they rebuild their property and increase inventories. Due to climate change, regulatory with storms and other weather-related events have occurred is increasing, and since people continue to build in vulnerable regions, the average cost of rebuilding continues to increase. Lastly, I'm going to talk about how the global pandemic has caused changes in the financial crisis in the past. The pandemic caused negative effects into financial stability and has raised both social and economic issues. There were social impacts of public health crisis at the macroeconomic level, including international trade, fiscal, and monetary policies. There were actually 5 post-war epidemic crises other than COVID, such as SARS in 2003, H1N1 in 2009, MERS in 2012, Ebola in 2014, and Zika in 2016. And other epidemics along the timeline is disease control priorities in 2018 was a project to address disease with cost-effective evidence. Then reports show pandemic crisis caused labor shortages in long-term in 2022, and Zeng was found to be an epidemic in 2023. Since companies were already suffering before the pandemic, there was also a combination of epidemic shock and financial shortages, which required banks to increase their loan during the pandemic. Finally, pandemic outbreaks cause increased risk to businesses, a decreased labor force, and increased worldwide health issues that greatly impact those who are not financially stable. The last course material to apply to my central question is the lecture of week number 13. I learned that during COVID-19, there must be support for citizens and companies affected by the virus. This relates to financial crisis impacts during COVID-19 because many people could not afford to pay their bailouts or to pay their debt when they needed to pay for vaccines during such a tough time instead of paying debts. As well as paying debts and managing to get vaccines, COVID-19 has caused financial impacts where people need to secure essential needs such as access to food and fuel distribution. As well as that, in other words, Gerber stated in the reading, he said that financial crisis during the pandemic has led to poor people being in poverty since they could not afford to pay back their debts, though they also had to manage to get access to food. And this then led to looting of public resources, collapse of societies, endemic violence, malnutrition, homelessness, and broken lives among poor people at this difficult time. All of these impacts that have occurred during the financial crisis are continuing even after the global pandemic. To conclude, you probably have figured out the answer to my central question by now. My focus question is, why did the financial crisis start, and has it come to its conclusion yet? The answer to my question is, main reasons why the financial crisis started was because of bankruptcy by the United States, household debt increases, impacts of financial crisis caused by household debt, natural disasters, and impacts of the financial crisis caused by the global pandemic. The answer to the second part of my question is, I believe that financial crisis has not come to its conclusion yet. And in fact, I believe that the financial crisis, so far everything, has continued for a long time since it started from the 1929 to the 1990s. It has continued to go on throughout history as the years go by. This includes the changes in 1994, 2001, 2007, 2008, 2010, during the pandemic in 2020, and even after the pandemic in 2023, which is the most recent year that has been completed. I believe also that although the crisis is still not resolved exactly in Canada, the United States, and other countries around the world are facing this major crisis and are still figuring out ways of how they can resolve this issue in this new year of 2024. So we have just begun to figure out the solution to the financial crisis, and it continues to go on as of today. So class discussion questions. Now my questions to everyone are the following. What do you think are the main reasons why the financial crisis has happened? What are the things that are not mentioned in my presentation that led to the financial crisis? Do you think the financial crisis continues, even as of today, in your opinion? That concludes our discussion. And this is my bibliography.